access to financing. And I believe this is a great dialogue, and feel free to post your questions as the discussions take place. Joining us today is Yanki and Steve. Without further delay, I'd like to have Yanki start introducing herself and some background about the business and the assistance that they provide in this space. And then we'll have Steve join us later. Yanki, turn it to you.
Yeah, so thank you, Anthony. And it's a pleasure to be here with all of you. Thank you to Nancy for organizing this webinar. We were just, earlier chatting in the waiting room. And we're talking about how, this has been a really, really extremely difficult time for small businesses. So just to give you a little bit of background, I'm Yanki Tshering. I'm the executive director and founder of the what used to be called the Business Center for New Americans. We rebranded, in the midst of COVID, but it all worked out really well as Accompany Capital. So Accompany Capital is a CDFI, which means we're certified by the CDFI fund at the US Department of Treasury. And what that means is there's quite a bit of compliance. It's very rigorous, but the great thing about being a CDFI is we can access low-cost loans, which we in turn lend to businesses like many of you who are on this webinar. Many of you, Nancy was updating us, are small business owners. We are also certified by the, Small Business Administration. We're certified as a micro lender and as a community advantage lender, which means, again, we can borrow funds from the SBA, very low cost, low interest, or sometimes at zero interest, and re-lend it to small business owners like all of you. So when I'm asked to give people a sense of who we work with, an example I have is we have a client who comes to us once a year to borrow $500 so that he can buy an inventory of roses and sell them on Valentine's Day. And then on the other end, we have a client who's borrowed $250,000 and on numerous occasions, 75,000 or more, because he has 4 grocery stores. So having said that, I don't know if I should talk a little bit more about the, more details about the services we provide, or Anthony, do you want Stephen to introduce himself and then come back to me, or what do you prefer?
Let's give Stephen a quick chance to join us. And Stephen, why don't you give us some background?
Sure. Well, good afternoon, everybody. And Yanki, thank you for, taking the lead. So it's a great opportunity for me to, be on a panel with Accompany Capital and all the great work that they do in New York City. So, we are a proud lender in New York City. The name of my organization is Local Initiative Support Corporation, also known as LISC. We're a 42-year-old CDFI. Much like Accompany Capital. And we've primarily focused on affordable housing for most of our career. In the past 4 to 5 years, we've really expanded our offerings to small businesses. We wanted to be a partner to CDFIs when businesses grow and they still may not be ready for a banking relationship. So we do loans greater than $250,000. We partner with Accompany Capital and other CDFIs in the market to make sure that if a customer is receiving a CDFI experience, which is very welcoming and trusting, that we can provide the same experience when they come to an organization like LISC. We offer a multitude of products. We actually do have an SBA 7A license, so we can do loans up to $5 million. We've also found that we do most of our loans outside of SBA. So we are, looking at some situations where, borrowers don't, fit into an SBA box all the time, but they have viable and strong businesses. And we just want to get a better understanding of what challenges that borrower is facing, and then try to make sure if we're not the right partner, find out who is. So I'm excited to be a part of this panel today. And I hope to do the small business owners on the call some justice by, answering your concerns and providing you feedback that you desire.
Excellent, Steve. Since we have you, why don't you go over quickly some of the recent developments and and cases that you may have run into. I think for the benefit of the audience, can you just briefly describe the process as to how participants can look into some of the products or available options that your organization offer? You have talked about the fact that the size of the loan can be as low as $250,000 to about $5 million. So can you give a rough idea how that works, who may qualify, and what sort of requirement is needed? And then perhaps we can then turn it to Yanki and have the same conversation as well.
Sure. Well, first, we always encourage everybody on this call to, start with your initial partner first. I mean, a lot of times people, they will reach out to LISC or try to get in contact with us directly, but most of the time we work through great CDFIs like Accompany Capital. So having a relationship with Accompany Capital or another partner in the New York market is probably the best way to reach us, to be honest with you. We don't have an online app because we're a relationship lender. We really like to get to know our customers. We want to know the communities they operate in. And we only lend to, people of color, immigrants, veterans, or women. So we're very, concise in our community that we serve. So we really work through business development organizations in that community. So, in New York, it could be a financial opportunity center that teaches people financial literacy, who also may have, great small businesses come through that program. It could be a grant opportunity that we work with a not-for-profit in your community, whether it's in Queens or in Long Island. So the breadth of the opportunities we have usually come through a partner as far as making direct contact with LISC. So that way we're using our capital to build our communities up. And the Asian American community in New York and throughout the United States is a valuable partner to us. So we have a lot of great Asian American-led organizations that we work with. But what we've seen, to kind of answer the first part of your question, is the challenges of 2020 have been pretty dire on building new relationships. A lot of times the small business owners still have to go in, they still have to try to make whatever income that they can, and their income levels aren't the same. So we are looking at how did you historically operate in 2019 as a real key performance for how the business operates. We're not totally discounting 2020, but we just want to understand like what your 2020 challenges were. Was there, a longer lockdown than expected? Did you, family member or an employee, contract COVID, which led to, a short-term closure? Or really has your sales increased because maybe one of your competitors actually met those challenges? So it's really important for us to, be active listeners and work with organizations like Accompany Capital to find out if there's a need greater than what they're able to offer. And that's where we get excited, because we help businesses grow along with their original partner. And we're not taking 2020 as the model for success. We're just saying that was a challenging year for everybody, and we want to help people grow and move forward.
Thank you, Steve. Yanki, can you give us some background on these process
I
and
want to add
products?
what Steve said. He spoke very eloquently about how organizations like LISC meet their mission. So what's a little bit of a contradiction about Accompany Capital is, even though our core mission is access to affordable credit, one of the things we do is when a client walks in, we do show them the menu of services we have. We have webinars, we have, a technology to increase your bottom line program. At one point, we were even given hardware and software access from Hewlett Packard and some other technology companies. And, it was, re-granted to our clients, because we're very aware of the digital divide between more established businesses and the mom and pop businesses we serve. But again, getting back to what I said about the contradiction, we have these loans which range from $500,000 to $250,000. We even have a line of credit product. But what we will look at first, and especially during these times, post-COVID, is what relief you qualify for first. Do you qualify? Can we help you with the PPP loan? Can we help you with, currently for the Borough of Queens, 17 million was donated by the Stephen and Alexandra Cohen Foundation, where one of the 4 CDFIs that's been, asked to sort of administer these grants. And we already submitted for about 50 businesses. So, hopefully, it's going to be a few hundred businesses combined with, the assistance of the other 3 CDFIs that would qualify for grants up to 20,000. So, we really believe in having boots on the ground and working really intensively with our, these are mostly, sole proprietors or family-owned businesses, and that's a little difficult right now. The first, group of clients, sector that we really looked at very intensively and looked to see where we could provide relief were our restaurants. And then we've, our grocery stores have done really well, but then, we're looking at all our clients. In March of 2020, when the pandemic hit us, we had about 700 active clients. So the first thing we did was really figure out the best way to communicate with them, figure out what sort of relief was available. So again, I encourage you, if you're here in New York, please go to our website, accompanycapital.org, and see what you qualify for. If you're, located elsewhere, I'm sure LISC, has partners in other parts of the country. There are many, many CDFIs, and Nancy had mentioned the Sba made a presentation. The Sba is a great resource. Many of the referrals we get are either word of mouth or through the Sba Link program.
Thank you, Yanki. I think as we turn into the process, I think for the audience, I think it's very helpful. This is a very difficult year, and many small businesses are in need for working capital. I think everybody's mindful of the cost of borrowing and the process it may take. While certain product and programs may give them a deeper wallet per se, but it's the time with which it may take and the application process and the information necessary to produce in order to qualify. Perhaps let me turn to you, Steve. Can you talk to us as to some of the more prominent programs that you have seen that people that work with you had been successful, and so that as a benchmarking, what may be something that our audience need to expect in order to quickly, I think time is of the essence, to get through it so that they can anticipate. I'm sure our audience may apply for multiple different programs, but perhaps from your experience, what are some of the recommendation that you may have for people who may not have a lot of resources, who may not have a great history, and that may be helpful. And Steve, why don't you start with this, and perhaps Yanki, you can supplement and give it your experience.
Sure, thank you, Anthony. If I'm a small business owner today, I would really look for my local CARES Act related resources. So in New York, there are a number of programs that are either local or state. And right now, like LISC is the fund manager for the New York Forward Fund. It gives you an opportunity to get working capital, so at very low interest rates. So, and that's, one particular program where I would say if you have, your financials together and you have a partnership with a CDFI, I would look at a program like that. The other thing I would look for is I would look for the SBA programs, especially PPP. So Accompany Capital offers PPP. PPP is a phenomenal program, especially if your request is under 150, because there's a potential, not guaranteed, but there's a potential that it could be forgiven. So, most of it's supposed to be forgiven anyway, but, if you get 100% forgiven, that's great because that's technically a grant. The other thing is, look for grant programs that are out there, and keep in mind they are lotteries. So I would apply for those things because I think every little bit helps in 2021. But one of the best things that I think you should do, and this is the one that people may not like to hear, but take all of your issues to your bank or to your CDFI and lay them on the table, either via webinar or in person if that works for you, and talk about all the trades you have. Like those relief programs that I just listed, those are for immediate relief. And we all need immediate relief in this particular economy. But it's time to also start talking about recovery. How do I get back to my staffing levels that I had pre-COVID? How do I get back to my, customer levels I had pre-COVID? And then, do I have a mortgage, a term loan, an equipment loan, and a working capital? And how do I consolidate that or make it into one loan, or try to ease my burden instead of, having 3 or 4 trades that, is causing me some anxiety? If I can have 1 or 2 trades and consolidate some of that debt, work with CDFIs like LISC or Accompany Capital to figure out how do I structure that debt into something that works for, keeping my business open. LISC is proud to partner with JP Morgan Chase on a program called the Entrepreneur of Color Fund Initiative. That initiative will allow us to help our CDFI partners restructure some of their debt in 7-year commitments. They don't necessarily have to be fully amortizing, but for the most part, they could, or it can be up to 25 years if we were consolidating real estate. But we want to help small businesses through their CDFI partners, look at their debt. And it's going to take a little bit longer than the New York Forward or PPP or EIDL for that matter, but it's going to put you somewhere later on this year in a better situation where you can still support your business for years to come. So ideally, I would look for the relief opportunities, but now is the time to start talking about what does recovery look like? How do I turn my business around, and how do I stay successful?
Thank you, Steve. Yanki?
Yeah, so again, I think Steve, provided a really good summary. Right now, they've just announced the next round of, PPP loans. What I would recommend everyone do is, do search and find out, all the various CDFIs and SBA funded programs and sign up so you can get alerts from them about any relief or any, extra grant program or some other assistance that you can, even the webinars are extremely helpful. So the thing with the, with LISC, I know Steven's group works with larger small businesses. So I think many more qualified for PPP loans. So, when the CARES Act was announced, there was one provision that people didn't pay as much attention to, but it was a lifeline for many of our clients, and that's the debt relief. So the CARES Act actually paid for 6 months of the monthly loan repayments on behalf of our clients to us, which was really helpful because it really strengthened our portfolio. So in this new round, what we've been told is if someone qualifies for an SBA loan, so you should definitely Google and find out, who are the Sba Micro Lenders in your area. We are one, there's several others. You don't have to only come to us, but we'll be delighted if you, approach Accompany Capital. So these loans range, we have the micro loan, which ranges from 500 to 50,000. And then we have the Community Advantage loan, which ranges up to 250,000. So what we've been informed is if you qualify and you get the loan, at this point for a certain period of time, 8 months of the loan repayments will be paid by the federal government, by the SBA. So that's a product, worth looking into. And then getting back to what Anthony mentioned and Steve also mentioned, during this period, we've seen so many of our clients and new clients. There was, the idle loans and, which is, it's almost like a mortgage. And there were so many occasions where small businesses would have qualified for those loans. And I think it was pretty generous, the terms. But what they had done is they had received very poor advice from their accountants. So we've had many, many occasions, a teaching moment to our new clients or current clients about how it's really important to get your finances in order. make sure you're fully aware what your accountant is saying and doing. And if it's not good, if it's poor advice, we really recommend you do some research or get some advice from a CDFI that doesn't have any interest in who they refer you to. They may probably give you a list of accountants that they've vetted, so you get the advice you deserve, because it's you have a long-term plan. It's not you're not filing taxes just to qualify for one loan product, or to pay less taxes. So having said that, I also agree with Steve that this is a great time to be making plans post-COVID. What do you do? Do you strengthen your online presence? Should you be consolidating your if you have several loans? Really looking into the future and assessing what are the next strategic steps you need to take. And there are a number of CDFIs that have really excellent webinars or one-on-one technical assistance. So I really encourage you to reach out to them.
Thank you, Yanki. I think you have brought up a number of very important questions and commentary. As one of the largest minority-owned firms in New York City, Wei & Co., we deal with a lot of small businesses and clients. And a lot of times we do hear the fact that their predecessors, accountants or advisors have not prepared them sufficient enough. Can the two of you talk a little bit more about the documentation requirement that is necessary for applicants to be successful in the loan application process? What are some of the basic things that they may need to be mindful of? And I don't think it's too late to do the right thing, from tax returns to historical financials. What are some of the things that you have run into, perhaps that are lessons learned for our audience to avoid, so that they can be better prepared to take advantage of some of the products out there? And perhaps, Steve, you can start with your experience, seeing how some of these applications may not be, they could have done a better job to get the application approved, but they may be falling short on some of the documentations. So, and perhaps the two of you can share with us some of your experience so that our audience can be better prepared.
Sure. I'm always happy to talk about, documentation, but I want to talk about it from a different perspective. A lot of the businesses that we work with, they're from, immigrant communities, or, second generation, where they're inherited business that their parents own. And historically, there were concerns of how they would get, investment in this market. So when it comes to, the banking system, those small business owners didn't feel that they had access to capital opportunities. So there was some anxiety and belief that if they followed the advice of their, tax preparer or CPA, that they should just save the money, much like they do in their home country. So, if you're from, a place from outside of New York, you may want to save at home, or you want to save at a bank in a savings deposit box. I've worked in banks for 15 plus years prior to joining the CDFI space, and I can't tell you how many times that people had their business backup savings in a safe deposit box, and I think that's changing now, because people, they don't depend on the banks as much, but the practice of doing those documentation didn't change. So if your parents showed you a way to do it, and they were first generation, and now you're second generation, you're still following the same methodology if you haven't decided to do it different. So part of being a CDFI is really explaining to small business owners the value of changing to access investment from other parties. Like, it's about honor, and it's about trust, and it's about faith, and letting us know that we want to have a relationship with you that goes beyond the financials, but that still means we want you to do the financials. So I think ideally, a lot of our success comes from working with great CDFIs like Accompany Capital, because they've started that transformation process. They've taken that business from the $500 micro loan to get roses to, buying their inventory on a quarterly basis with the SBA Community Advantage loan. But can you imagine what Yanki and her team had to do to get somebody from $500 to $250,000? That's the transformation that we would like to see happen. And, that means we want you to have tax returns. We want you to have a balance sheet and an income statement prepared by somebody other than the people that work there. Now, we get it. If you're not that big, you can probably do it yourself. But we want to understand your business cycle and understand that you understand it. So if you are if you're an import company and you're selling on 7th Ave or something like that, well, we want to know what your receivables are. Who are you expecting to get paid from, and who do you owe for the stuff that you received that you're expecting to sell? So AR agent, AP agent, and we really want to know about your personal financial statement. You'd be surprised that when I look at, a personal financial statement from someone from the immigrant community, they got a lot of cash that they save and they have no debt. So a lot of times we're having the first borrowing conversation or second borrowing conversation where they're like, I borrowed 200,000, but I really don't want to do this. But, we work with, great Asian communities in like San Diego, right? And I go, you gonna buy this bodega for $1.6 million and it's 400 square feet? Like, depending on where you live, real estate can be really, really expensive. But when you don't want to borrow and you find an opportunity that makes sense for you and your family, CDFIs are here to help bridge that gap. But we need the documentation, same as the bank. We want to talk to you about how you got there, whether you're first generation, second gen, and you refuse to change because that's the way it's always worked. We're going to take time and we're going to be patient with you to allow you to move through the experience to make you more eligible for the most amount of financing that you should be able to get. And that's what we're looking for.
Thank you, Steve. Yanki?
So, the clients who come to us for a microloan, very often they have no credit score, or they're coming to us because they were turned down by, larger financial institutions because they had problems in the score, or, there was a lien or there was some problem and it wasn't really explained to them properly. So one of the things we always, tell our clients is, look, we're here to actually help you qualify. And that's what we try our best to do. So we don't decide. We don't have like a formula. Very often, banks, and obviously their business model is very different from ours. And I don't dare say a lot of negative things about banks because most of the banks that are out there actually support us. They support CDFIs and invest in some of us because they realize we're actually, as Steve mentioned, educating the clientele and getting them ready. So then eventually they can, borrow $1 million from a bank. We are there to help them and to be able to get them to the level where we can say yes. So whether it's poor credit score, no credit score, we make credit builder loans. It's very labor intensive. As Steve says, you'll be shocked at how much work it is. It's pretty much the same level of work to make a, $5,000 loan as a $50,000. And, there's much more, more margins and interest income to be made from some of the larger loans. But then obviously our mission is very different from a bank or a larger, other financial institutions. So there are many, teaching and learning moments, and especially during this post-COVID period. But again, I have to, sort of reinforce what Anthony and Steve said. I think most of the problems and unfortunately errors that come up and prevent many of the small businesses from getting the access to the relief or funding they really deserve is poor documents that were not tax returns and other financial documents that have errors or were not filed properly, or a lot of this is due to poor advice.
Thank you, Yanki. And Steve, these are very, very good information. I think for the audience, whether you are a brand new organization that just started or you are in an early stage of your life cycle, um, getting to do things right the first time is very important, and involving talents and professionals to do some of the things for you so that you can run your business is also very helpful. I think all entrepreneurs are born and have a very strong desire, but managing cash flows and doing tax returns and and preparing a projections on your forecast is a very different animals. And I would want to encourage you in different stages of your journey. You may want to tap into accountants, consultants, and professional like Steve and Yanki along the way so that you can better prepare your needs for funds. With that said, we have a few questions, and I thought this may be a good time to bring them up to both of you, and perhaps you can share your perspective. We have on audience a question about that the organization was brand new. It was established back in August of 2020. Are there any quick program or good program that should be considered by this organization, given the fact that they all share the same needs in terms of getting loans and getting relief? So for a newly established organization, what are some of the available program? Perhaps starting with you, Yanki, because you are dealing with companies.
I would say the ones that are most suitable would be the Sba Microloan Program, especially if you qualify. And you should, I mean, depending on, again, your, financial documents and, what sort of state your business is in. Has it been closed, since March of last year? Or I think Anthony, you mentioned they were opened in, was it August of
2020? Yeah.
Okay, so this was during COVID. So, if it's very innovative and it's, response to COVID, then, you would probably qualify. But I would definitely reach out to a Sba micro lender. I doubt you would qualify for a CA loan. The great thing is, you would get 8 months. If you qualify for a loan, there would be 8 months of loan repayments that would be paid on your behalf to the CDFI, and also grant programs, depending again on the sector you're in. There are a number of programs for restaurants, and then rent relief programs. So I would really, reach out to all the CDFIs, SBA lenders in your area.
Great, thank you. There's a question for both of you in terms of the organization that you run and how you facilitate the flow of funds. The question is, how is the interest rate on your lending programs compared to other big bank loans? So perhaps, Steve, I will start with you. How is well, you're not a bank. How do your programs different, and how do you see the rates? Steve, you are.
I was on mute.
Yeah.
One of the best things that happened during COVID was the interest rates across the country have gone down, and which means that in most CDFIs we borrow from financial institutions, and then we relend that money out to our communities. So our interest rates now are under 7 and can be as low as 4. Now it depends on what you're doing in there, but it's our rates are really low. But our average loan is about 500,000. So in comparison, if you do a $50,000 loan and the rate is 14%, that's still less than a credit card. So it just so I still think that's pretty low too. And we work with a lot of microloan partners, and that's what they charge, and their rates are actually coming down too because of the declining rate environment.
Thank you, Steve. Yanki?
So what we decided very early on is, to reduce our interest rates, and we reduced them to 3%, because what we found was, it doesn't really make a huge difference for a small loan to increase it to 4 or 5, but, for the psychological benefit, because we had so many clients, sort of looping back to the loan officers and very anxious and very upset. So, not only did we offer emergency loans at 3% and the relief, but we also lowered the loans that were then on our books, because during the post-COVID period, there were many banks and corporations that were making grants available, and so we were able to put those grants towards, some of it towards debt relief. So we felt there was a psychological need, we felt, to reassure our clients, like, don't worry, focus on, a strategy to reopen or figure out how do you strengthen your presence online. Don't worry about that. Instead of 10%, we're going to charge you 3%, and you may even qualify for, debt relief.
Okay, thank you. This is very helpful. There's another question about an entrepreneur who's trying to, in this very difficult time, turn the store from rent to a mortgage. Are there any programs within your organizations that would be helpful?
Yes. We are, LISC is primarily a real estate lender. And I want to be honest, if I have a commercial storefront in 2021, I'm really worried about, is my landlord paying their mortgage? So if you look at, what's going on that's impacting your business, is also impacting the entrepreneurs who own commercial real estate. So if there's an opportunity for you to acquire your space at a discounted rate, so I don't think you should buy it at the top of the market. I mean, there should be all kind of deals coming up soon, but pay attention, because what you don't want to have is those commercial real estate entrepreneurs who can't make their mortgage payments, and then one day the lender comes and forecloses on the building and shuts your business. So if you can buy, I would definitely consider it at this time, and that is the type of lending we do. That's why our average loan is a little bit higher.
Thank you, Steve. Now, another question that we would like to know is, given some of the resources both of you have in this space, what are some of the most attractive program that you may want to recommend for people just to consider? Because this is a time to shop around. If companies that are bigger and not in a hurry to, because there's a cost of borrowing, we all know that. So at the end of the day, for any entrepreneur, they want to get the best deal available. So from your perspective, since you're looking at a bigger organization that may be a little bit more established, a little bit different from the clientele of Yanki, perhaps, Steve, you can talk to us about some of the available program that could be a good choice for people to consider.
Sure. I mean, there's a lot of interesting things going on right now. And I think the desire to either combine two like-minded businesses or to acquire a like-minded business to not only protect the employees, but protect those jobs from, going to another community. So we have a couple of instruments that we would do it at LISC. So we would, first use the Entrepreneur Color Fund and kind of help structure a transaction like that. We use SBA. We also have another initiative called the Good Jobs Fund. So it's kind of a mezzanine debt product. So most of our lending goes up to 5 million, but with that particular product, we can go a little bit higher depending on what the opportunity is. So we're always looking to help businesses and communities make smart decisions. But right now it's time for, and we use the example of a store, two stores to come together to control your distribution and your costs and your inventory, and if you can partner together and it's the right thing to do, find out how that can work, because that may allow you to, kind of expand your strategy. But right now, I'm really encouraging small business owners to think about that and think about how SBA or, some of the products at LISC can help you make those big decisions.
Before I turn this to Yanki, one quick question is, can you comment on what is the average time from initiation of a dialogue to a completed handshake when money gets to the hands of the applicant? Can you give us a rough idea of what that timing may take?
Sure. For us, I like to say we like to have a discovery call with that borrower and their referring partner just to get an understanding of the history. And then we have to build relationship and trust prior to even, getting to a credit decision. So usually on average, we probably want to do at least about 6 months. We can do it as fast as 2, but most of our borrowers are connected to somebody else with really long-term and deep relationships. So, and we want to keep the originating partner involved for as long as we can too, because they are the vehicle that help that business grow and really be a going concern. So, and part of that process, it really makes it a better experience for the small business owner. So, and I just think that takes time. And if it's somebody we mutually know, I mean, that's 6 to 8 weeks. But with our customers, I just feel like there's always some trust, there's some understanding, there's some relationship stuff that we really have to get through. And when you're acquiring new business for a CPA firm, you're kind of going through the same thing for new client acquisition. So I would say that timeline is about the same, about 6 months.
Thank you, Steve. Yanki, from your experience?
So for Accompany Capital, if you're talking about someone coming in for a microloan, the biggest challenge is getting the documents, because very often it's a business that's never had to, maybe they filed taxes, but they're not really filing it the way they should, or they don't have any other financial documents to prove, they have bank statements, but maybe they're using their personal bank statements. So I guess the challenge is getting the right documentation. And that's where our staff spend a lot of time. You could spend up to a month and you still don't have the whole package together. But if someone walks in, we had a case like that, which was, very refreshing. About a month ago, a new client who had everything in order and, within 2 weeks, and this was for a larger loan, you could approve 50 to 75,000. But I would say generally it actually takes longer for some of the smaller loans because there's more technical assistance and hand-holding and helping, involved. But then the way we present it to our clients is say, look, initially it's going to take a lot more time upfront, but once, we worked with you, we know you, and there's this mutual trust, when you come back for the $10,000 loan or 15 or eventually 50, it's going to be much easier. And then for our CA loans, obviously it takes, sometimes it can take a few months. So what we did was we developed a product that's up to 75,000. So, in the interim period, we would lend a prospective CA client the 75,000 and work on their application. And then eventually when they get their CA loan, 250, they can repay the balance of, the $75,000 loan. So, so that's how we work. I know it sounds a little informal and, it's a little bit all over the place, but that's, that's what's required to help our clients. So that's what we have to do.
Well, this is very helpful for them to be able to enjoy the float while the application process takes place. So I think for the audience, I think it's very, very important to do your homework to get the papers in order and seek advice early enough to make sure whether it's a combination of tax returns and proof of ownership and the sort of things that are generally not available. So if that sort of preparation can be done ahead of time, then the application process will be a lot more smoother, and perhaps the timeline to complete the entire process may be shortened at that juncture. So with that, I wanted to also ask questions to both of you in terms of, are there any incremental costs that the participants or applicant need to consider outside of the 3% or the whatever, because no one likes to have any hidden items. Do they need to be mindful of some incremental out-of-pocket expenses? Starting with you, Yanki, if they were to go to you and apply a loan or certain particular grants, are there any additional things that they need to be mindful of?
So normally we were charging closing costs, if I'm not mistaken, I have to check with our, chief lending officer. We said, okay, let's not charge that. Let's only charge the 3% interest. But for the CA loans, there are many costs involved.
Mm,
And, that's why, when someone comes in for a CA loan, they qualify, they're a little disappointed because there's some legal fees, there's some, other fees that, Steve can probably is, able to sort of, he can recite them one by one. I'm not there doing the direct works, but it's all that information is on the website.
right.
But at the end of the day, once everything is processed and paid for, they're, actually very pleased. I think it's a really great product, and it's a really good fit for the person who's, sort of slowly building their business and looking on to, maybe add more staff and your second location. So, I think it's very reasonable the way it's priced.
Thank you very much. Steve, on your end?
And I agree. I think with CDFI pricing, it's the total cost of ownership that you get when you borrow from a CDFI. So when you look at, like we have a 3% closing fee. And SBA is like 2.75. So it's very comparable, but we also have, associated legal fees or whatever the transaction is, because we're usually doing real estate or something that you had to pay other people to get it done, appraisals and environmentals and, title insurance and title deed and all that additional documentation, transfer tax. So when we're going through all of that, always, people, they look at the fees, they say, I don't want to pay this fee. And then I say, but what's the total cost of you doing it the other way?
Mm-hmm.
I want to be honest, and I want to say this, and I'm not trying to offend anybody, but a lot of small businesses use merchant cash advance,
Mm-hmm.
loans from the credit card machine, because it's fast, and I know we probably scare people. We're like, oh, 6 months, because we got to get to know you. They're like, oh, no, that takes too long. Yanki, how long do you take? Oh, no, I can't do that either. I have all my paperwork. When we get there, you won't have it all. But, but when you borrow something that's really, really fast, and a $4,000 loan from your merchant cash advance will cost you $1,200, and you have to pay it back in 3-4 months, that's crazy.
Mm-hmm.
That doesn't help your business. I mean, yes, it's fast, but it doesn't help. So a lot of times I'm telling people, what's the alternative? I mean, let's not get too caught up on our rates, because our rates have to be higher,
Mm-hmm.
because we're borrowing from the bank to pass them on to you. Otherwise, we'll be doing negative arbitrage, right? We'll be losing money for every loan we make. We can't do that and stay open. So, but we promise, and I work with CDFIs all over the country. CDFIs promise not to charge you more than, what the market allows. So you're not going to have a 20%, 30% mortgage. You're not going to have a, 40% working capital loan like you would from a fintech company. So, I mean, there's a lot of value in taking time and working with us and trying to figure out. And yes, when you see those fees, they're not hidden. They're the alternative to you doing it the other way.
Correct.
And then once you get an understanding, ask that lender a question, and hopefully they'll say, yes, there's a 3% fee for here. And these real estate taxes or the real estate costs is the same if you bought a house. Mm-hmm. We're not adding these fees. This is what the county and the state and the city adds. So having that explanation to borrowers, I think is really, really important. That's the value of the CDFI community. Like, we're here to protect you from things that, fast ain't good, and something's too fast may not be honorable. So, I mean, there's a reason why I emphasize, partnering not only with LISC, but Accompany Capital, making sure that somebody, if not Yanki, somebody on her team is walking you through what it is for you to be successful. So you're not falling into the perils of what's going on out there that, to be honest with you, it's not regulated, and the CDFIs are.
Mm-hmm, mm-hmm. This is very, very good advice. I think in summary, perhaps for all of the audience, you are great entrepreneurs, but at the end of the day, it is all about balancing your decisions, balancing your your needs, whether it is growth needs or just needs to survive, keep the doors open and keep payroll going. And these are some of the alternatives that you can talk into. And I'm glad that today we have Steve and Yanki to share with you their different perspective from a much more established borrowing to an entry-level borrowing. But at the end of the day, it's all about having to recognize the cost of doing business. There is a cost to making certain that the right advisors are there for you so that you can turn to the right people in the time of need at this point with COVID and everybody's strapped for cash. So it's important to just looking at your options meaningfully and also managing expectations, because there's no free lunch. At the end, everybody needs to do the right thing. And perhaps with this sort of dialogue, and I believe that both Steve and Yanki's email are going to be shared at the end of this session, so that should there be any additional questions or inquiry, this will be a good way to network. I think networking is one of the things that we want to go through with the benefit of this webinar organized by AABDC. So I believe that this is a great opportunity for many of us to be able to learn a few things in this very difficult time. I haven't seen any additional questions, so I wanted to just ask the two participants, Steve and Yanki, to share with us some parting words, words of wisdom, so that our audience can walk away with something more to prepare themselves.
Mm-hmm. So, what I wanted to say is, I know these are exceptionally difficult times, especially for small business owners. But I'm very hopeful, and my, sort of word of advice is really with all the Sba Micro and CA lenders, you can just go online and sign up to get information, and also go on. Most of them have a page which says COVID relief or COVID related programs, CDFIs. Please go and sign up so you know what's going on, and reach out to them and take full advantage of all the relief, because the less debt you have, the better. But if you need debt, again, as Anthony and Steve have said, there's a cost to owning a business, and it's an investment. Think of it as an investment. Thank you.
Thank you, Yanki. Steve?
Wow. First, Anthony, thank you for being a great moderator, and Yanki, thank you for being a great panelist. I couldn't have done what I'm doing today without y'all, so it just gives me an honor. And I think the reason why I said that is we have a CPA and a leader of a CDFI on this call to help, you, the would-be attendees, and you have to leverage this community to point you in the right direction. I mean, that's what we're here for. This is not, we're not in get rich quick scheme organizations. We are, community focused, mission-based organizations looking to help people. And I can't do a panel without knowing that that's who the other attendees are. So I just want to thank you both. And to all of you out there that are listening, I'm so excited for you and your business. I know I can't help all of you, but I can definitely point you in the right direction to get you on a great path. So I just wanted to say thank you. I really appreciate this opportunity, and I look forward to speaking with you all in the future.
Thank you, Steve, and thank you, Yanki. And I thank all of you for taking the time to join us today. I'm going to turn it back to the organizer. Nancy?
Yes, thank you all for coming to this webinar, and we really appreciate Yanki, Steve, and Anthony taking the time to share these great resources and programs for our small business partners. And a lot of you has been asking if we can share Yanki and Steve's contact info. I'll follow up with an email along with the video for today's webinar, so you would have the access you might need for the future. And that's it. Thank you so much for attending. And if you have any follow-up questions, feel free to shoot us an email.
Thank you, everyone. Be safe and be well.
Nancy and Anthony.
Thank you.
Take care. Bye-bye.
Thanks,
Bye.
everybody. Bye-bye.